This is the Collecting Real Estate Podcast. I'm your host, Stephen Purse, here with your co-host, Bill Hamill.
I'm so much more comfortable collecting real estate than I am collecting other stuff.
Welcome to Collecting Real Estate. This is a podcast where we discuss the collections that real estate investors have built and dive into the stories, habits, and decisions that got them to where they are. My name is Stephen Purse, and I'm here with my co-host, Bill Hamill.
Good morning, Stephen. I feel like I'm just getting started with the new phase of my real estate career. Yesterday, I sold my truck and plow, so I am 100% an owner of my business, no longer an operator of my business. So please hold me accountable to that.
I am, and I think we're going to do a reverse test where you have to get the answers wrong, and I'm going to ask you the tenants' names, and I think that's the final test. If you can't name one tenant, then you pass the test.
I love it.
So today we're really lucky to have Matthew Dunn here. I'm really excited to hear more about his story and his real estate career. Matthew, can you tell us a little bit more about yourself and your real estate history?
Yes, absolutely. Good morning. It's a pleasure to be here today. So I started real estate back in 2016. My plan was to exit my W-2 because it had me traveling so much. I was working for an exotic car company from 2008, which brought me to the US in around 2009. I moved to Florida, and from there we started building a family. And it was a case of so much travel, being on the road. I was in a Marriott like 100 nights a year. It was kind of crazy. It was fine until we started having growing our family, and had our first daughter in 2016. I'm like, you know what? I need to figure out a way to kind of get out of the rat race here and create some other income that doesn't trade my time for money. So I started with a quadplex in 2017. A great property. It was one that I still own today, and from there it was kind of like the light bulb moment. A lot of people say, it's the law of that first deal, and it really was for me. The 4-unit is a tremendous cash flowing asset. I was able to basically pull out about 80% of the money into that deal after we did the value add. Shortly after that, I purchased a 3-unit. That was also in the Tampa Bay market. Got into syndication in 2019, purchased a 59-unit as a general partner, and then I just started to see the power of commercial real estate, and joined a community here locally for commercial coaching, and that was really how I got started. And now I'm just closed actually an 8-unit in Fort Myers 2 weeks ago, so really excited about that. So I quit my W-2 last summer and spent actually the last 12 months traveling the country in an RV as well. So lots to kind of talk about.
No, that's awesome. I know that we met each other in that community that we both joined. I have to always give them a shout out. That Jake and Gino community is very valuable in a lot of different ways. I am so interested in many parts of your story, getting to know you over the last 10 months. But let's start with that, leaving the W-2. For so many, it takes an extended period of time. You had a couple smaller properties, and then you did that 59-unit. That was the tipping point for you? You had that much certainty leaving the W-2 once you did that syndication deal?
Yeah, so there was, to be honest, the cash flowing deals really were what I was focused on at the start. So that 4-unit was able to unlock, like right now, that cash flow is around 300 a unit. And that was my kind of goal moving into doing more deals. I looked for about 250 per unit on the smaller assets. However, when I refied that property, I was frustrated that the appraisal came back, without factoring in the NOI, the net operating income. So I'm like, you know what, how do I build value in my future purchases? So that's when I, figured out the 5 units and up, the commercial space was where to go. So I started looking at, 12 units and higher. Long story short, I ended up partnering on this 59 unit with a group I met from a local boot camp in Orlando in 2019. And yes, that was a tipping point. I'm like, you know what, I understood the power of using OPM, other people's money at that point. I continued to buy smaller deals in 2019 as well that made sense from a cash flow standpoint. So I think I see it as two different types of strategies. So you can use the smaller properties potentially and get the cash flow from them to replace your expenses. And that was my initial goal, to exit the W-2, to replace basically what our expenses were. And I see more of the bigger deals is moving, that's the business that I want to build and that I'm continuing to work on right now. And that's kind of where my focus is, because that's just a completely different animal versus the smaller plexes.
That 59 unit, you just stated that you met a group of guys from a different management group or networking group. What was how did you form that relationship? What role did you fill in that syndication? And is it what you're continuing to specialize now, or are you still just trying to find your way around as far as what you want to specialize in, as far as whether you want to be that deal finder or the asset manager or any of those other roles in a syndication?
Yeah, great question. Yeah, so it was a funny story. I was looking for, like I said, a 12 unit plus in 2019. I came across a 22 unit and actually had an LOI submitted on this asset. Turned out a friend of mine who I'd met a couple months prior also had an LOI on the same property. So we just got talking, and I said, fair enough. All the best to you guys. You proceed. You've got that relationship with the broker already. There's always more deals, right? And he said, let me talk to my partner. Maybe we can figure something out. So we had a conference call the next day, and we decided we would partner on this 22 unit. Well, long story short, the 22 turned into a 59 because the seller actually had other assets he was moving as well. So the team that I met at that boot camp, they knew I was experienced with self-managing, because I'd self-managed that 4 unit for the first year. So I had that asset management experience, and they didn't really have that. So that was I was a perfect key player for them on that deal. So that's how that deal came together. And that to answer your question, that is my specialty now. I'm continuing to do asset management now. I don't self-manage anymore. I'd like to have, I value my time too much, and you need to scale up and to use third-party management. And that was my goal.
I want to go back to the message of the smaller buildings provide the financial freedom, but getting into those larger commercial spaces really is what builds wealth. I think that's a really important message there. Now that you're quickly growing in the commercial space, are you sticking to the Florida market, or are you looking around with these partnerships that you've built all around the country?
Yeah, so whilst we were traveling in our RV, I was actually looking at different markets that were interesting to us out west, and other parts of the country that we were spending prolonged periods of time, and I would kind of look at assets for sale and figure out if they made sense. To be honest, though, the most useful part of my time is to focus on my market. My strategy is broker relations. So with that, you have to be very focused on keep following up with brokers. Talking to them every 2 to 3 weeks is critical. So for me, I'm focused predominantly all in Central and Southwest Florida. That's where I find it, my value is best placed.
Yeah, that makes sense. You also mentioned that you self-manage the first couple of units, and now you're at a stage where you value your time too much to keep managing. How is that transition from self-managing to hiring outside property management?
Yeah, great question. Yeah, so the self-managing allowed me to really figure out, what you need to look for in a manager. That's so important. And I'm glad I self-managed. I made some mistakes self-managing for sure, but that's how you learn, right? You go in, so that allowed me to figure out, okay, well, how are they screening my residents? What's their criteria? How are they advertising the units? What's their plan for inspections? All the there's dozens of things you need to be checking on these managers. And I think had I not have self-managed and I went straight to a manager, I definitely would have been not as pleased with the results. It would have taken me longer to get good management.
Yeah, you don't know what you don't know. Going back to that first few purchases, more of the smaller properties, and then you just purchased that 8 unit, but I'm so focused on that 59 unit, which is that commercial multifamily that we're all fighting for or competing for or helping each other find with the Jake and Gino community. What is your criteria now as far as unit count?
So I am looking, because I've already achieved that kind of cash flow we sort of need right now for our living expenses. I'm actually looking for more of a fee-based income. And with that comes syndications for the most part. So with that said, to be able to get the returns for my investors, I really need to be in excess of probably like 24 units and up. So between 24 and 100 doors is kind of where I'm looking right now.
But you can't help when you see an 8 unit with value add, you always have to jump on that opportunity like you just recently did.
Mm-hmm.
Tell us more about that 8 unit. What did you purchase that at, and what is your repositioning plan? Are you going to take it from what value to that elevated value in what period of time?
So the 59 unit we purchased in July of 2019, and at that time it was an off-market listing through a local broker. We got under contract for $64,000 per unit, and our strategy was to go in. There was a lot of management upside on this. It was actually out of the country owner. They were based in China. So they were really checked out. They were using an in-house leasing office. The gentleman there, when we first met him, was actually accepting a lot of cash payments from the residents, and the resident base was just, really quite low. It was in a C- part of North Tampa, which is definitely gentrifying. And right now it's arguably probably a solid C, progressing into a C+. But the tenant base was probably, in the D kind of level. So that we needed a really good management plan on this one. So that was where I came in. I was asset management. I was responsible for screening potential good managers, and we actually ended up finding a great management company that all they do is apartments. That was critical to be able to add the value to this property. And we've done about 25% of the renovations to this. The plan was not to update the entire property. We started on the outside. We spent about $600,000 on 25% of the interiors, and the exteriors are pretty much done. We did all the roofs, we repainted, we rebranded. So it's been a really good strategy, and honestly, there's been a lot of organic appreciation in Florida, as we all know. So we're actually exiting right now, and our price guidance on this asset right now is $115,000 per unit, and we have multiple offers on this as we speak. So this will be our first full cycle.
That's a big gap.
That's great. That Tampa market is really thriving right now. Matthew, it seems like you're someone that sets goals for yourself and is able to achieve them, from first getting out of the W-2 lifestyle and then to growing into this larger commercial space. Is goal setting something that's helped you throughout your career and also in your personal life?
It really is. Yeah. I have a habit of setting pretty lofty goals. And I figure if I don't meet, that big goal that I've set, at least I'm going to actually make a lot of progress towards, more than I would have done had I not set a goal at all, right? So I definitely do set goals. It's very important. We, as part of the community actually that we're in, we're part of an accountability pod, and that really allows us to set weekly goals. And that's where I find the most value, is actually giving accountability to others and also having accountability from others. And it's just those incremental steps, like every week. In the past, I had a habit, and I'll just tell you a quick story. So I had a goal back in 2018 to close a multifamily property by the end of the year. That was the goal. What I didn't realize was that's too much of a vague goal. I had no monthly activities to do, no weekly activities to perform to get to that goal. So by November time, I was starting to say, oh, I'm not getting there, what do I need to do? But big lesson learned. You got to break it down into actionable steps per week, per day even. So very important.
So today, diving into that deeper, how far do you break it down? What's the time frame? Do you have daily, weekly, and yearly goals, or what does that look like for you?
I have weekly. I think it works differently for different people, but for me, weekly goals seem to be moving the needle the best, because daily, your day can kind of get a little bit derailed sometimes. I have a 5-year-old and a 3-year-old, so sometimes stuff just happens, and it's out of my control. I have to take care of something, so that daily goal could be completely destroyed. So having weekly goals, I try and front load my week, so I'll try and be very productive, say Monday, Tuesday, and then have less kind of items to tick off my list by the end of the week. And if I'm not able to, I can always do some items over the weekend. And it resets on Monday. So on Sunday night we have our check-in call, and then we go through everything that we've done and everything we're going to be doing the following week, and it's been working really, really well.
I really appreciate those weekly goals. I've been so set on 1 year, 3 year, 5-year goals. Can you give us an example of a weekly goal, or a few examples of weekly goals, just to give us an idea of that short period of time, what you're trying to accomplish?
Absolutely. Yeah, so I break it down in personal goals and business goals. So for business, I typically have an underwriting goal. So I want to underwrite at least 2 deals per week. So right now for this week, my goal is I want to underwrite 2 75 plus unit deals this week. I want to schedule at least 1 tour. So next week, I'm planning on getting a tour with a broker. I'll have goals on some reading, or I want to attend a networking event from the community. And on the personal side, I'll have a goal for exercise. I'm an avid runner, so I'll try and get out and exercise at least 2 or 3 times a week. So I break it down like that. You don't want to kind of have too many items because it can be overwhelming. I find around 6 to maybe 8 points per week is plenty.
Oh, that's beautiful. So those weekly goals really develops your habits and routines.
It really does, and it moves the needle. If you try and set a monthly goal, I'm a procrastinator by nature. Unfortunately, that's just how I am. Some people perhaps can just self-motivate and think of a yearly goal and just go do it. But for me, doing that weekly is what's been effective.
That's something I would like to try out a little bit more myself. At what point did you feel like you were collecting real estate? Was it when you first got that first 4 unit, or did it take a little bit longer to have the mindset shift of, okay, now I'm a real estate investor?
I think while I was still working at W2, that was my identity. I worked for Rolls Royce Motor Cars. I was the Rolls Royce Motor Cars field engineer. That was my identity, and that was how I present myself to people. If someone asked me, "What do you do?" that was my go-to, my answer. So it took a while to change my identity to that real estate investor, and that didn't really happen. Maybe about 6 months prior to me sending in my resignation was when I started to identify as a real estate investor, because I knew that that was my future path.
Well, that's great. I seeing that you were the working as a Rolls Royce salesman, that caught me. That your accent and selling Rolls Royces seems to go hand in hand. Were you having a degree of success there, and you just needed something more? Tell us about your history with selling those types of vehicles, and then that transition into real estate.
It's interesting. Yes, the circle of people you meet within the ultra exotic car business, there's actually there's a lot of opportunity to talk to people that have got lots of capital, right? Because that's the circle of people that you're surrounded by. My circle of my network was mostly the dealerships, throughout the United States, in the Southeast specifically. It was interesting, though, for the last year or so, as I was really scaling up my real estate, I would find myself talking probably about 50% about real estate to some of the customers and the people I'd be working with. So it was really, really it's difficult to get out of that mindset of talking about the car business, talking about real estate. So no, it was definitely that.
Do you have a database of people, clients from that business that you're staying in touch with to raise money for your multifamily?
I have a database just from people that I've just kept in contact with through the years I was there. I was in the role for 16 years, so it's a long time. Yeah, but yeah, no, I keep in touch with people, and it's interesting. Once I left my W-2, a number of people reached out to me, because usually when someone leaves, a brand, they'll go to a different brand. They usually stay within the automotive kind of world. But I didn't go to a competitor. I didn't, I left the business completely. So quite a few people actually reached out to me, through, from the corporate side and asked, what are you doing? How were you able to leave the job? You didn't go to another car company. How are you able to do what you're doing? So I've actually given some kind of like mini coaching calls to people on getting started in real estate investing.
A lot of investors want to take that plunge, but they're too scared, and they don't want to leave the comfort of having the W-2. How are you able to budget that all out? What did that look like from a financial perspective of, okay, this is when I can leave the job?
Yeah, so I started off when I was first looking at exiting the W-2 world. I discovered this movement called the FIRE movement. It stands for Financial Independence, Retire Early. It's a completely different realm of investing from real estate. There is some real estate people in the group. For the most part, it circles around amassing large amounts of savings. So usually you need to be about 50 to 75% of a savings rate. You do that for 9 to 15 years. That allows you then to live off the dividends that you've invested that money all into low-cost index funds. That's basically the intention. So I was really, really good at figuring out, okay, what's our expenses? Let's trim back, unnecessary subscriptions to things. There's so many things that often people will sign up for, but especially with the internet and how easy things are to buy now, you can have things coming out of your bank account and not even really know. So I was really focused on trimming out unnecessary expenses and understanding really what our expenses were, really down to the dollar per month. So it's really easy to transition into figuring out what our exit number per month would needed to be.
That's great. That's probably translated into, multifamily investing, where you have turned into an expert budgeter. So you're able to, really look at line items on your underwriting. I obviously have noticed you traveling around the country, which is phenomenal. There's not many people that are able, to do what you're doing right now, especially with a family. Can you tell us how many states you've been to, and what you've had to do as far as pacing out your money, traveling from state to state, and what that looks like in your mindset there?
Yes, absolutely. Great question. I'm glad you asked that one. So we did 20 states. We're currently in Florida now. We're actually looking to kind of stop traveling. We're in St. Augustine as I speak. We've been here about a month, and we're pretty much done. We've been traveling for 14 months. We've done 18 national parks. We decided to leave pretty much 2 months after COVID started because we were so kind of tired of being within our own four walls. It was just seemed perfect timing to go do that. Our children are 5 and 3, as I mentioned, and they were preschool age, so it was a perfect time to kind of hit the road with them. And then my wife's actually homeschooling our 5-year-old right now, and she'll be going into a regular school next year. So the timing really worked out perfect for doing the RV thing. And it is very inexpensive. Our average cost per night works out to be about $27 a night. When you factor in, all the different prices throughout the country. The biggest expense with RVing is when you're moving, actually, because the gas, every time you're moving, it's an expense. So the slower you go, the actual more affordable it is.
Good tips for anyone that wants to do the van life. How has it been managing a real estate portfolio on the road like that?
That has been a challenge, actually, for sure. It's because it depends on where we've been in the country. So, for example, I love the mountains. I'm huge passionate about anything mountains, and we did so many high elevation kind of parts of the country. I wanted to go out and see stuff. We wanted to hike. We wanted to check out, so many cool things. So with that comes, okay, well, I can't be focused on doing, 30 hours of real estate this week because I don't want to miss out on this, this location we're at. So when we were in Colorado, for example, I fell in love with Durango, Silverton, Array. All those parts of Colorado were beautiful. And as an avid runner and a motorcyclist, I wanted to get out and explore, and family wanted to do obviously the same thing. So I really didn't do any real estate in Colorado, to be honest. Sometimes you just have to, take in where you're at and put ultimately that was why we were on the trip in the first place. We created the income to be able to do it. So it's a balance. But then when we were in other places like Kansas, I pretty much just worked real estate, 95% of the time. So I really wasn't interested in seeing too much of that state.
No, that's cool. I can't help but to pick different things out of your answers. The motorcycling. I have to follow up with that, knowing that you're traveling the country with your family in an RV, and you finished that journey. What is your goal for riding your road bike for charity? What does that look like?
Yeah, so I got into road cycling about 4 years ago, and that's bikes that you've been on our trip the whole time, and it's been really, really good to get out and explore, and especially in some of the high elevation stuff. It's amazing how much fitter you'll get by training in those high elevations. But yeah, no, I did a 100-mile charity ride. That was actually just before we left on our trip for it was actually another multifamily investor down in Sarasota. I was able to raise about $700 for his Tiny Hands Foundation by riding a century ride in around Southwest Florida. So that was awesome. I'd like to do more of that.
Matthew, one thing I like to ask a lot of people that we speak with is if they have any funny stories from their real estate career. Try and lighten the mood a little bit. Is there anything that comes to mind for you when I say a real estate related funny story?
Yes, I'm thinking when I was self-managing, actually, that would be the story that comes to mind. So I self-managed my fourplex for about 12 months. After we had our second daughter, and I committed to my wife that I would employ a management company, which was a smart move. I should have probably done it a little bit beforehand. Well, anyway, I have a habit of being a little bit of probably a micromanager sometimes. And I think because I'd been so attached to this property, I knew every single part of this asset. I was in there doing maintenance calls. I knew the residents really well. I screened all of them. I knew all the contractors, on all the project. Well, once the property manager started, I was kind of probably talking to them about little things that I didn't really need to. I just really should have let them just do their job, and there was little bits and pieces that I should have just let go of. Specifically things of perhaps on the residents, like there was a resident that needed an additional parking space. They could have easily asked the property manager that, and I got involved with that and just other things. And it came to a head where I think they were getting so frustrated with me reaching out to them too often. Ultimately, you hire a manager because you don't want to do all the managing. I was kind of still doing half of it. So they actually said, you know what, I think you're better off probably continuing doing the management until you feel comfortable actually, using a management company. And they ended up letting me go. So that was kind of the funny story. And I learned a lot from that experience. So,
boy, do I love that. I was a hands-on property manager for 25 years. Now I have third-party property management. So I'm left being an asset manager, trying to find that comfort zone on having a high expectation, hitting the numbers on our properties, but at the same time, not being so difficult where I'm going to get fired. So please give me some advice as far as what is that sweet spot from an asset managing standpoint where what do we have to do to get the results that we want, but at the same time having a healthy relationship with our property manager?
Yeah, I think the biggest thing would be to give them some free reign, certainly at the beginning. Give them your framework of what you want them to do. Have them understand what your KPIs are for the asset. For example, the 8-unit we just purchased. I'm having pretty frequent contact with the manager now, probably twice a week, just so she understands what the renewals look like, what our targets are for the year, and then let them roll with that. Give them the space to be able to implement the plan and see how they do. And then if they're not meeting those marks, then you can check in and say, is there anything you need from my side, or what can we do to rectify this issue? So give them the free reign at the beginning for sure, so they feel like they have that, you have that faith in them.
So you feel like it's necessary for twice a week because of the busy repositioning. After it's repositioned, do you think that will tail off to a once a week, once a month? What does that look like?
Yeah, absolutely. Once they got into the groove, like for our 59 unit, for example, we have a biweekly call with them, and that works perfect. I mean, you don't need to be talking multiple times a week, unless there's, you can have a quick call here and there, but we'll have a call with the manager to just go through all of our occupancies and any delinquencies. And obviously with COVID, that was definitely a more frequent discussion, because there was a lot of unknowns going on at that time, but that's definitely settled down again. So yeah, I think bi-weekly is a good sweet spot once you're stabilized.
Very helpful, thank you.
It sounded to me like once you started real estate investing, you really went headfirst into it. You were moving really quickly, and now you've had this 14-month period where you've been traveling around the country. Almost take a deep breath and reflect on all the great things you did. During that reflection, is there anything that you would have changed looking back at it?
Let's see. That's a really good question. It's interesting when you've done so much traveling, you've seen so many things. It does take quite a while to actually recall and reflect on everything you've seen. So it's hard to think back exactly to anything we would change. I think the biggest thing to think about when you're going to go on an endeavor like this is choosing the correct equipment. So I suppose when I see other comparisons of what other people are traveling in, when I say equipment, I mean the actual RV itself or the tow vehicle. We were kind of restricted from a budget standpoint with our, we have a half-ton F-150 truck. So we needed to buy an RV that was light enough for that truck to be able to tow. The layout of that rig has been really, really good. It has enough space for everything we need, and it has actually a separate bunkhouse at the back for the kids, which is phenomenal. I think looking back, if we'd have changed something, I probably would have upgraded it to a larger truck and got a larger rig, just because we weren't expecting to be still actually in the RV sitting right here. We were actually planning on being done and into probably some kind of permanent residence as we speak. But because we've seen so much stuff, our target on where we wanted to live and what we thought we wanted back then is actually not what we want now. So we're actually spending more time to figure out, well, what kind of house do we want to move into now? And that's ultimately ended up with us being in the rig longer. So, that's all hindsight's 2020, but that would be probably the main thing.
I meant things you might have changed in regards to real estate, but I love hearing more about the travels too.
Oh, no worries.
Listen to that all day.
Well, on the real estate side, I think I love the fact that I got into multifamily at the start. Yeah, I was never really interested in doing the single family items because of the vacancy factor. When you're empty, you got no income, right? So like the multifamily side of things. I probably would have got into commercial earlier. I think, shortly after that 4-unit, I probably should have just gone into the 5 units and up. Instead, I was focused on doing more plexes, thinking that was going to be the path. And ultimately, that worked. I mean, it does give you the cash flow, but I think I could have scaled faster, got more equity in deals. That's really where wealth comes from. It's getting the equity in the deals. You don't need to be so hung up on the cash flow part. I feel like for generational wealth purposes.
So do you find yourself in a situation now where you're looking for that single family home and also on the tail end of liquidating your 59 unit? So, you're kind of playing two ends of the spectrum. Tell us about that.
A lot going on for sure. Yeah, so luckily, we have a team on the 59 unit, so it's not just me. I definitely have that I am kind of mentality a little bit. So it's good to have, the team kind of, working on more the sales side of the asset. We check in, every couple of weeks or so as a group, but it's been that actual asset. So just to give you a slight story on that, we had it under contract, and we should have closed actually by about a week ago on the 59 unit. However, the buyer was unable to complete the financing on the asset, so they ended up pulling out the day before due diligence ended. So we went back to market about 2 weeks ago, and we now have another accepted LOI, actually at a higher price. So that's really nice. So it's been kind of up and down on that asset a little bit. There's a lot of competition, as you know, especially in Tampa and a lot of Southwest and Central Florida for sure. So there's a lot of credible buyers out there. So I'm not concerned in the slightest about having this asset sold. There's a huge demand right now. But yeah, the biggest challenge right now on the single family side, because I don't have a W-2 income, it's finding the financing on a single family home. I have, I own my own name, almost 20 units. But that doesn't kind of factor in when you talk to a conventional real estate lender to talk about your primary residence purchase. They want to see W-2 income. So so I'm working on that stuff right now, and it's taking a while to figure that out.
Yeah, that's interesting how, it's a challenge to get a mortgage on a single family being self-employed, but you're able to go and buy an 8-unit commercial property without any problems.
You got it. Exactly.
And that's the name of the game. I think that is the difficult bridge that a lot of investors, find themselves in, where you keep that job, that W-2, so you can continue to do some of those smaller properties. On that 59 unit, once that sells, what is your plan there? Is it going to be a 1031 into your next big deal? Are you keeping with that same partnership and that structure moving into the next property?
Yeah, so I will likely 1031 into the next deal for sure. So I'm really focused right now, like I mentioned, on broker communications and getting another deal under contract before the end of the year is the goal. So that's the plan. It's unlikely that I'll move it forward with the group that we purchased with, because they're not buying right now. They decided, they accumulated actually quite a lot of assets over the last couple of years, and they've shifted more into new build development actually, and they moved actually up into Atlanta. Their head office moved. So great team, but it was their directions kind of changed, and it's great for them and great for me. So.
Got any irons in the fire as far as any properties that seem like you might be able to land, or are you dealing with that challenge like many of us are, finding that deal that actually works in a competitive market?
Yeah, I mean, that's kind of why I focused on brokers. So actually, it's true what they say. Once you've proved to be a closer, you're going to start to get more deal flow. And it was really good because the broker that we closed our Fort Myers property with, the 8-unit, it was really pleased that we closed on time. I'm very big about keeping them updated on what's going on, and he was very, very happy with the professionalism of the transaction on that deal. So he's actually bought me another property in Cape Coral, just across the river, which is off market. It's not been marketed yet, and to give us a first look. So that's kind of what I'm looking at right now. I'm just waiting for the tour date that we can get in and take a look.
Excellent. I hope that you do utilize that 1031. I know how valuable that is. So yeah, all the luck with that.
Appreciate it. Thank you.
Usually around this 40-minute mark, we like to conclude the episode to save your time and our listeners' time. Bill, do you wanna start that?
Absolutely. Thank you, Stephen. they say that you have to have 3 of something to have a collection. So we have a collection of questions to finish this episode. What is your 1 to 2 year real estate goals?
Yeah, so my by the end of this year, so I guess I'll answer that in a 2-tier approach. So at the end of this year, I'm looking to get another deal under contract and potentially closed early next year. Within the next 12 months, I'm really looking to close 3 more deals. So that's the goal right now. So those will be on my weeklies for sure.
Beautiful, beautiful. Second question is, what are your 1 to 2 year personal goals?
So as a runner, I've really want to complete my first trail marathon. So that's a personal goal that I've been working on for a while. I run shorter distances, and I'm looking to scale up into I fell in love with trail running, so I love that. So that's the next thing I want to do is a trail marathon.
Beautiful, beautiful. I can't wait for our next run together.
Me too.
Third question is, what can Steve and I or the listeners assist you with, and how can we contact you?
Yeah, absolutely. I mean, reach out to me. Love to connect with other like-minded investors, see how we can help one another. So you can reach out to me on LinkedIn with my name there is Matthew Dunn. You can email me directly at matthew@rightmoveproperties.net. And you can also reach me on Facebook as Matt Dunn.
Awesome, Matt. I appreciate that. You've been a great guest. Your story is absolutely fantastic. I love the courage of everything you've done, specifically quitting that W-2, jumping right into that uncertainty of commercial real estate, as lucrative as we all know how it is, but to then, take your family to 20 different states through a pandemic. So I can't wait to continue our relationship, continue our discussion. So if the listeners enjoyed this episode, please subscribe, give us a 5-star review. Matt, thank you once again.
It was a pleasure. Thank you so much, gentlemen. I'll talk soon.
Thank you, Matt. I hope
Bye-bye.
we can meet in Tampa soon.
Look forward to it. Take care.